Hello students, in today's lesson we are going to discuss journal entries, double entries. I am going to take a step-by-step approach. We are going to discuss double entries or journal entries only for accounting equation items, assets, liabilities and capital. So let's start. I am going to start with question number 3, but before that a quick recap from the last lesson. In the first lesson, we discussed accounting equation. Accounting equation is assets are equal to liabilities plus capital. So today we are going to learn rules of debits and credits for assets, liabilities and capital. Before we learn rules of debits and credits, we need to identify effects of business transactions. Effects of business transactions on assets, liabilities or capital. It is possible that assets are increasing, liabilities are increasing, or it is also possible that assets are decreasing and liabilities are also decreasing. How does it work? Let's have a look. So you can see first transaction. We pay a creditor £70 in cash. In this business transaction, we must identify two business accounts. So I can see first business account I can identify is cash and other business account is creditor. Okay, when business pays £70 in cash to a creditor, then it means cash balance in the business is falling. Cash is an asset, decreases, so I will put a negative sign in front of assets. On the other hand, a creditor is a payable. A payable is a liability. When we paid off creditor, its balance will decrease. So it means liabilities are also decreasing. To show decrease, I am showing a negative sign with liabilities. Okay, let's have a look at the next transaction. Bought fixtures £200, paying by check. I can identify two accounts here. One is check and other is fixtures. Okay, first of all, what are fixtures? Fixtures are assets. When we bought fixtures, fixtures have increased in the business. It means assets have increased. I will put a positive sign. We paid by check. Check means bank balance. Bank balance is an asset. And when we paid money out of bank, it means our bank balance is falling, decreasing. So I will put a negative sign. Okay, so one asset increasing, one asset decreasing. Next is transaction C. Bought goods on credit. So here I can identify goods and on credit. These are two accounts involved here. So goods, inventory are assets. When we bought goods, it means goods are increasing in the business, positive. And then we bought goods on credit. When we bought goods on credit, that means our liability is also increasing. I will put a positive sign with liabilities. We bought on credit, which means our liability is increasing. So that's why I'm putting a positive sign in front of liabilities. Next transaction, D. Proprietor introduces another £500 cash in the firm. So I can identify these two accounts. Okay, first of all, cash has been introduced in the business. cash balance in the business is increasing. Whatever accounting we are doing here, we are doing for business. We are not doing for personal accounts of owner. We are doing accounts for business. So you can see cash balance in the business has increased. On the other hand, proprietor introduces, it means it's a capital, and capital is also increasing. Okay, next we have J. Walker lends the firm 200 pounds in cash. So I can identify two accounts. One is cash and one is lends. When business has received loan, cash balance in the business has increased, so assets are increasing. On the other hand, J. Walker lends the firm 200 pounds in cash. Lends mean loan. Loan is a liability. Increases, I will put a positive sign in liabilities. Okay, next we got a debtor pays us 50 pounds by check. So two accounts I have to identify. One is debtor and one is bank. So debtor is a receivable. Receivable is an asset. When debtor paid us, balance of debtor is falling, decreasing. Therefore, assets decreasing. On the other hand, 50 pound paid by check. So it means 50 pounds are going in our bank account. So our bank balance is increasing. Bank balance is an asset, increases, positive. Next, G. We returned goods costing 60 pounds to a supplier whose bill we had not paid. First of all, goods are assets and goods are going out of business, so our assets are decreasing. Supplier, creditor, payable is a liability. Since we have returned goods, we are not going to pay that bill. It means business liabilities are falling, negative effect on liabilities. Next business transaction, H. Bought additional shop premises, paying 5,000 pounds by check. So premises and check are two accounts. Premises means property. Property is an asset. When business bought premises, it means property is increasing. Paid by check means paid from bank. Bank balance is falling by 5,000 pounds. It means that asset bank balance is falling negative. Okay, we are continuing with question number 4. Transaction A. Bought a van on credit 8,700 pounds. I can identify two accounts. One is credit, one is van. Van is an asset, increases, so positive in assets. Van was bought on credit. Since van was bought on credit, therefore our liability is increasing. Liability increases, positive. Okay, next. I can identify two accounts. Repaid by cash, a loan owed to FDUF 10,000 pounds. Very easy. I can identify two accounts here. One is cash. Cash is an asset and it is decreasing because we paid off loan. So assets negative, liabilities also negative. Liability is negative because when we have paid off loan, balance of loan will fall. Next, C. Bought goods for 1,400 pounds paying by check. I can identify two accounts, goods and check. So goods are assets, assets are increasing, paying by check. Bank balance is an asset and asset is decreasing. D. The owner puts a further £4,000 cash into the business. One account I can identify is owner. Owner means capital. Other account I can identify is cash. Cash is an asset, increases in the business, so assets positive. Owner has put money in the business, that means capital is increasing. Next, E. Debtor returns to us £150 goods. Okay, so debtor is a receivable or credit customer. When debtor returned goods to us, he is not going to pay for those goods. It means our receivable is decreasing. So assets are decreasing. On the other hand, goods are also an asset. Goods are inventory and assets, so it will be increasing because we have received goods. Goods are increasing in the business, so assets have increased. Next transaction, F. So I can see goods on credit, two accounts. We bought goods, it means goods are increasing, asset is increasing. We bought on credit, it means our liability is increasing. The owner takes out £200 cash for personal use. So £200 cash. Cash is one asset and personal use and owner. These words show us it's opposite to capital. So first, cash. Cash is decreasing out of business because cash is going out of business. And then owner has withdrawn for personal use. It's mean capital is falling. Next, we pay a creditor. Creditor by check. So creditor is a liability. Creditor is a payable. When we paid off liability, its balance will fall. Its balance will decrease. We paid by check. Check means bank account. So bank account is an asset decreasing. So that completes this question. So we have learned how to identify effects of business transactions on assets and liabilities. Now we are going to learn rules of debits and credits. So this is how a T account looks like. So you can see these are rules of debits and credits for assets. Assets increases debit. I repeat, asset whenever increases, it will be debited. Asset whenever decreases, credits. I repeat, asset whenever decreases, it will be credited. Okay. Next, rules of debits and credits for liabilities. Liabilities or capital. For both of these, rules are same. Liabilities whenever increase, credit. I repeat, liabilities increase, credit. Liabilities decrease, debit. Liabilities or capital whenever decreases, it will be debited. Okay, we will do some practice of debits and credits now. So here you can see transaction A. We bought a lorry for cash. I can see two accounts here in this transaction A, lorry and cash. So lorry is an asset, increases debit. I will put here lorry. Let me change font size. Okay. Now the next thing is cash. When we paid cash for lorry, cash balance has decreased in the business. Cash is an asset, decreases credit. B. Paid creditor T Lake by check. So first of all, when we paid off creditor, creditor balance is decreasing, which means liability is decreasing. Liability decreases debit. So here payable or creditor will be debited. Paid a creditor by check. So check means asset. Check means bank. So bank decreases credit. So next is repaid P. Logan's loan by cash. So cash is an asset, decreases credit. So cash credit. Okay. And what is to be debited? Loan. Loan is a liability, decreases debit. Okay, next is sold lorry for cash. Lorry is an asset going out of business, that means decrease credit. We received cash by selling lorry. Cash is an asset, increases in the business, debit. Bought office machinery on credit. So office machinery is an asset, increases debit. Machinery. It is bought on credit. Credit means liability. Liability is increasing. Liability increases credit. So here I will take payable, liability. F. A debtor A Hill pays us by cash. So debtor is an asset. When debtor has paid off, its balance is decreasing. Credit. So here goes debtor. Debtor has paid us cash. Cash balance has increased in the business. Cash is an asset, increases debit. Transaction G is very much similar to transaction F. Only difference is this time again a debtor is paying us, but this time debtor is paying by check. So check means bank. It means our bank balance is increasing. Bank is an asset, decreases, bank is an asset, increases debit. So I will put here bank debit. And just like before, debtor will be credited. Proprietor means capital, puts a further amount in the business by check. Check is an asset, increases debit. So bank debit and capital, because owner is putting more money in the business, capital is increasing. Capital increases credit. So I will take here capital. Okay, a loan of £200 in cash is received. Cash has received. Cash increases in the business. Cash is an asset, debit. It is a loan. A loan is a liability. liability is increasing, so credit. Loan, credit. Next is paid a creditor, deload by cash. When we paid by cash, asset is going out of business. So cash is an asset which is decreasing, credit. Creditor is a payable, creditor is a liability. Liability decreases, debit. So payable, debit. Okay, let's do some practice here. So we got question number 5A, bought office machinery. So office machinery is one account, bought office machinery on credit from DICAP. Office machinery is an asset, increases, debited. Office machinery, I'm debiting. It is bought on credit. When we bought on credit, our liability is increasing. So I will credit payable. Payable or liability will be credited. Okay, proprietor paid a creditor. Now this is a tricky transaction. When proprietor has paid a creditor, it means that owner has paid from his own pockets. That means capital is increasing in the business. Capital increases, credit. Creditor means payable. Payable means liability. When we paid a creditor, our liability is reducing. Liability reduces, debit. So payable will be debited. Next we got a debtor paid us in cash. So debtor is an asset and cash is also an asset. Cash has increased in the business. When cash has increased in the business, cash is an asset, increases, debit. On the other hand, debtor is a receivable. Receivable is an asset. Receivable decreases, credit. Okay, next we got D. So we got loan and we got check. Okay, so loan has been paid off. Loan is a liability. Paid off. It means loan balance is decreasing. Liability decreasing. Liability decreases, debit. Next is it is paid by check. So check means bank account. Bank account is an asset. When we paid by check, our bank balance is decreasing, asset is decreasing. So bank, credit. Next we got return sum of office machinery. Office machinery is an asset. It has gone out of business. Therefore, asset is decreasing. So I will credit office machinery. Okay, question is what to debit. Whenever they mention name of supplier or customer, it means that it's either payable or receivable. So if you check this transaction transaction E is actually reversal of transaction A. I repeat, transaction E is reversal of transaction A. So if we in A we did office machinery, debit, payable, credit. Now we will debit payable. Because we have returned office machinery to our supplier, therefore we are not going to pay them for returned office machinery. Since we are not going to pay, therefore our payable balance is falling. Since our payable balance is falling, it means that liability is decreasing. Liability decreases debit. Next we got F. In F we got debtor and we got check. Debtor pays us by check. Check means bank. Bank means asset, and asset is increasing. So bank debit. Debtor paid us. So debtor balance is decreasing. Receivable balance is decreasing. Receivable is an asset, decreases credit. Next, bought when by cash. So when is an asset, increases debit. Cash is an asset, decreases, means asset decreases, therefore credit. Okay, so next we are going to learn how to pass double entries in the journal. So you can see this question, we have some business transactions here and we have to write up assets, liabilities and capital accounts, but we'll do that later. First we are going to learn how to pass double entries in the journal. So I have already copied these transactions on one screen. So you can see I have copied these transactions here so that we don't have to switch again and again. This is what we call a journal. We are going to pass double entries in journal. So you can see journal has 4 columns. Date, in date column, first of all we will write year and then monthly dates. In the second column we will write debits and credits, and in the third column we will write amounts. So let's have a look at first transaction. Started business with 15,000 pounds in the bank. So one account I can identify is bank. Bank is an asset, increases debit. Okay, so here owner is bringing money from his own pocket. Owner is bringing money from his own pocket and investing in the business. That means capital is increasing. So capital credit. Now see, capital I will pass entry here. All credit entries with the 1 inch difference on the right hand side, all debit entries on left hand side. This way, if anyone looks at the journal, they can immediately see and spot which entry is to be debited, which entry is to be credited. 15,000 pounds credit. Here we can also write a narration, but I'm not passing here, but passing narration is very easy. You simply have to write to record. I will copy rest of it here. Start of business with 15,000 pounds in the bank. So this is a narration. A narration is like a little detail about the business transaction. So whichever business transaction you are recording, in narration you will write to record and then just copy paste rest of it from the transaction. This is how you will write narration. In my video, I'm not gonna write narrations, but if you want to, you can write narrations. It's up to you. So that was entry on 1st of July. 2nd July, bought office furniture by check. So July 2nd, office furniture is an asset. increases debit, amount 1200. It is paid by check. Check is an asset. Asset is decreasing. So asset decreases, credit. Bank credit. Third, bought machinery 1400 pounds. So I will debit machinery because asset increases, debit. It is bought on credit. It means liability. Payable is increasing. So payable increases, credit. Amount 1400 and 1400. Okay, next, transaction number 5. Bought a van, paying by check 6010. So van is an asset, increases, debit. Paying by check, so check is an asset, decreasing, credit. 6010. 6010. Okay, sold some of the office furniture. Office furniture is going out of business. Office furniture is an asset, going out, so credit. So office furniture is sold on credit. It means receivable. Receivable is an asset, increases, debit. $150. Number 15. Paid the amount owing to Trees Limited. It means they are paying a payable. A payable is a liability. So when they are paying a payable, we will debit payable because liability decreases, debit. And then we paid by check. So check means bank. Bank is an asset. Asset decreases, credit. Amount 1400. 1400. Twenty-third, received the amount due from Dietwig and Sons, 150 pounds in cash. So cash is an asset, increasing in the business, debit. So received amount from receivable. Receivable is an asset. Receivable is an asset, decreasing, credit. 31st, bought more machinery by check, 650 pounds. So machinery is an asset. When we are buying, machinery is increasing. So machinery, debit. And what to credit? Bank is to be credited because bank is also an asset. Asset decreases, credit. So bank credit, amount 650. 650. So this is the complete solution for this question. I hope you guys have understood the concept of double entries for statement of financial position items, accounting equation items, that are assets, liabilities, and capital. Okay, dear students, this is the last question for today's lesson. So first of all, I'm gonna write date. Here again, we have to prepare double entries, journal entries. Okay, so you can see started business with 12,000 pounds in cash. Cash has increased in the business. Cash is an asset, increases, debit. So 12,000 pounds debit. Since owner has invested money in the business in this transaction, therefore capital is also increasing. Capital increases, credit. Next transaction is on 2nd of June. They are saying paid 11,700 of the opening cash into a business bank account. Okay, so cash is decreasing in the business because cash in the till is being taken out and put it in the bank account. So 11,700. Bank is increasing. Bank is an asset, increases debit. Cash in the till is decreasing. Cash is an asset, decreases credit. Next is 5th. Bought office furniture on credit. So office furniture is an asset, increases debit. And then it is bought on credit. Credit means liability. Liability increases credit. So payable, credit. Amount is 1900. Okay, next is 8th. Bought a van, paying by check. So van is an asset, increases debit. Check means bank. Bank is an asset, decreases credit. Amount 5250. 5250. 12th. Bought equipment. Equipment is an asset, increases debit. Bought equipment from Pierce & Sons on credit. So credit means payable. Payable is increasing, liability is increasing, so that will be credited. So 2,300 and 2,300. Next, number 18. Okay, 18, returned faulty office furniture to Dream Limited. Amount is 120. Let me just write down first. 120 debit, 120 credit. Now, if you look at this transaction on 18th, it's opposite to 5. So, I will credit furniture and I will debit payable. Because we are not going to pay for the furniture that we have returned. Our liability is decreasing. Liability decreases debit. Furniture is an asset gone out of business. So furniture balance is also decreasing. Asset decreases, credit. Next transaction, number 25. Office furniture sold for cash. Cash is being received in the business. Cash received, cash increased, debit. Amount 200. Equipment has gone out of business. So equipment is an asset, decreases credit. Next we got 26. Paid amount owing to Dream Limited for 1780 by check. So bank is credited because money is being paid out of bank. 1780. When money is paying out of bank account is decreasing. Bank decreasing, credit. So Dream Limited was our payable from the earlier transactions. So payable is paid. So payable is paid, payable balance is decreasing, liability decreasing, debit. Next we got 28th. Took 130 out of bank and added to cash. So cash balance is increasing. Cash is an asset. Increases debit amount 130. And bank balance is increasing 130. Next is 30th. Last transaction. F. Brown lent us £4,000, giving us money by check. So our bank balance is increasing. Bank is an asset, increases debit 4,000. And what to credit? 4,000. Loan. Cash money is loan. Loan is a liability, increases. So liability increases credit. So that's all for today. Today we learned debits and credits for SOFP, Statement of Financial Position accounts. I'm going to post links for all these documents, these Excel files, Excel spreadsheet and Word file in the description. If you like my video, please subscribe to my channel, comment, share and let me know how did you like my effort. I will keep posting more videos on accounting, finance and tax. Thank you.